Famous Brands has increased its first half headline earnings per share by 20% to 150 cents. That's despite subdued consumer spending and intense margin pressure across the retail landscape. Joining us for a look at the numbers is Kevin Hedderwick, CEO of Famous Brands, and still with us at the desk this afternoon is Sasha Narishkin, Director at Vestact as well. Kevin, thanks so much for joining us this afternoon. Well, pretty impressive numbers you're coming through with this afternoon. Take us through this half-year period that was, because certainly something that has stood out and you've been commended for is your ability to actually erode or to work and whittle away against your operating cost base specifically.
It's been a strong set of results, we think, in a pretty demanding environment. What we have seen is it's a very competitive climate, and what consumers are clearly wanting at this time is value and quality. And so you'll see some margin erosion in our business. It's dropped back from 18.4 to about 17.3 or 4 this time around. So we've been very mindful of that, and we've done some quite aggressive things in terms of marketing, especially with some of our big brands. We call them the gorilla brands, like Steers and Debonair's in particular, and Wimpy too in terms of the breakfast offering, and that's all paid dividends. I think what you do see in times like these is that consumers tend to gravitate back to brands that they know and trust. So if you have minimum disposable income, I'm going to put my money where I know what I'm going to get.
Mm-hmm.
That's what I was going to say, Kevin. You've answered the question for me in your commentary. You say gravitation to tried and tested brands, you call them the gorilla brands, in the context of constrained disposable income. So it's interesting, you're acknowledging that the South African consumer is under pressure, but not so under pressure that that consumer is not going out and buying fast food, but just not buying the sort of newer brands, the upstart brands, but coming back to the ones that they know so well.
Yeah, that's absolutely correct. And I mean, if you see the type of growth that we're getting out of the big brands like Wimpy, Steers, Debonair's, Mug and Bean in particular, it does show that people are seriously voting for those brands, particularly being under pressure from a consumer disposable income perspective.
Just looking at where you've been commended, as I say, it's on your ability to rein in costs, and the JV with the cheese manufacturer, one of your most recent company announcements. To what extent do you see this alleviating some of the margin pressure on the business that you touched on a little earlier?
Yeah, well, I think what we're busy doing in Famous Brands right now is building capability right at the back end of our business as well. I think we've always been known as a business that's very good at the front end in terms of managing intellectual property, annuity-based income. We've done some good stuff in the logistics side of the business where we provide product to the franchise network. We're now going back upstream, or some people say downstream, into manufacturing. And we do that on the basis of the fact that we get into manufacturing where we can provide commodities to our franchise network at a price that's favorable to them, and also that we participate in the margin. So Famous Brands, from a business model perspective, you've seen some of the commentaries moving away from a business that was almost obsessed at the front end of the business, and we won't lose our passion for brands, but certainly building the back end of the business as well. And when the brand portfolio, the logistics business and the manufacturing are all working in unison, it's a very powerful business.
Kevin, one of the things we've been talking about for a couple of weeks now on Power Lunch has been demographics and the composition of population. And it fascinates me to ask you, over the years that you've been in the business, how people's tastes have changed. I mean, I've sort of missed out on this obsession with coffee, for example. I don't think I've ever been into a Mug and Bean, but every time I go past one, it's always full of people. What about pizzas? What about burgers? What are people buying, and who's buying these products?
There's sort of two standout phenomena, I suppose, if you will. I mean, the one is really the coffee thing, as you say. South Africa becoming more and more a cafe society. And certainly becoming a lot more discerning in terms of their coffee consumption habits. And that's where we're seeing strong growth emerging for a brand, particularly like Mug and Bean. At the other end of the spectrum, I can't contain my enthusiasm about the growth we see in the pizza category in South Africa. The growth in consumption per capita for pizza amongst the black market in particular is phenomenal. Wherever we put one of those brands within arm's reach of those consumers, the take-up has been huge. This year we'll probably open very, very close to 50 Debonair's pizza restaurants across South Africa and Africa. And I mean, that's an unbelievable rate of growth. And there's no reason to suggest that that's going to change. Even outside of South Africa, the growth of pizza as a commodity is phenomenal. So you have coffee at the one end in terms of the sort of upper LSM markets, And at the bottom end, as I say, pizza almost blowing the lights out in terms of growth.
Kevin, I got two questions and they're completely unrelated. The first one is, what does the health of your franchise holder look like, at a personal level? Because I guess that's very important for you guys. And secondly, do you ever get anxious about the valuations when you look at the share price, or you just say, well, I'll let that worry about itself and we're just going to keep doing what we're doing?
Yeah, I think the first thing first. I mean, in franchising, as you've quite rightly pointed out, I mean, we have got to be absolutely mindful of the health of the franchisee, because from a business perspective, we talk passionately about brands, but what is franchising really when you cut through it? Franchising is selling someone a business model. And so we have got to be very, very mindful of the fact that the business model we sell to the franchisee is going to materialize. And so hence some of the work we're doing at the back end in terms of manufacturing. I mean, if you take the coffee business for argument's sake, previously we used to get coffee from a third-party vendor outside, besides the fact that we never participated in the margin. What we're able to do now through a very low-cost coffee business where we're participating, we've reduced the coffee price to our franchisees by between 5 and 7%. That is significant in terms of protecting his margin at the rock face. So very mindful always of the fact that the franchisee has to make money. And I think when you have a handle on the supply chain like we do, we also have the ability to take margin erosion when we want to keep the price sharp at the end and protect the franchisee's business model. In terms of the share price, I mean, it's an interesting question. I mean, we have almost a philosophy at Famous Brands is that, we'll do what we know is best and the share price will take after itself. So sometimes even I'm astonished at the share price of 70 Rand, but we keep plugging away, doing what we know best, and the share price seems to take care of itself.
Well, Sasha, as an investor and as a shareholder in Famous Brands, I mean, what do you make of that valuation? Because it's something that you take a very close look at. Yeah,
I'm interested because whenever there are results, particularly in this period where it's been very tough for the economy, they're always at pains to say, okay, the backdrop looks quite tough, but they're still able to deliver that revenue growth of between 17 and 22% time after time. So as tough as it is, I'm just waiting for the good times to return, because then of course the share price will grow along with its earnings. So maybe it always gets ahead of yourself, but I say don't ever fight the collective, because the collective knows something better than you. So as long as we continue to be shareholders and as long as they continue to deliver, the trick of course is being able to miss any earnings stumble that comes along with it, but maybe therein lies an opportunity too.
Kevin, you said that you can't hardly contain yourself when it comes to debonaires in South Africa, and you particularly said that the black population is incredibly enthusiastic and tastes are changing, almost implying that tastes are changing and tastes changing quite rapidly. You must therefore be jumping through hoops about the prospect of the rest of Africa.
Very much so. I mean, we've spent the best part of 10, 12 years sort of laying the foundations for Africa. We've been in 15 African countries for a while. I mean, today Africa is the flavor of the month with all retailers. We've been there for a while. We understand the route to market. We're starting to see some very strong uptake now with Debonaire's pizza in markets like Nigeria. And I mean, I needn't say to you, if you get it right in Nigeria, it'll make South Africa look small. But yeah, in the markets outside of South Africa where we are working hard with Debonaire's pizza, the uptake has been phenomenal. And very excited about Debonaire's outside of South Africa, but then very excited about our whole brand portfolio outside of South Africa. Next year, we'll see some strong focus in Africa by Famous Brands.